So thank you for joining me to hear about the impact of open banking to social inclusion. My name is Carlos Figueredo, and I am the CEO of OpenVector. OpenVector is a consultancy firm specializing in open banking and open finance, payments, consent, and regulation. Open banking started in the UK in 2016 in order to implement regulatory changes requiring the top 9 banks to share data via APIs and for qualifying fintechs to consume that data, with the result of creating products and services that will benefit the consumer. This was the beginning of open banking. This initiative transformed itself in a global movement that is evolving into open finance in places like Mexico. Open finance means the sharing of data via APIs across more than just the banking sector. In the case of Mexico, this is in over 20 subsectors, affecting over 2,265 different entities. I was fortunate enough of being the head of data standards for the UK Open Banking Initiative, and therefore a co-author of the initiative. And while we quickly realized its importance, we never thought of the relevance this movement would have on social inclusion in particular. According to the World Bank, social inclusion is defined as the process of improving the terms on which individuals and groups take part in society, improving the ability, opportunity, and dignity of those disadvantaged on the basis of their identity. Why is social inclusion important? When financial institutions think of consumers or target clients of financial products and services, we have for most part of our history thought of those that are banked or that already have access to financial services. Why? Because they are individuals that provide the least financial risks, people with jobs or registered incomes. But what about those in poverty level, or farmers in remote locations, or in countries where people registration and tax structure is inefficient? These individuals do not have the ease of access to financial products and services that we may take for granted. From a simple bank account to the access of an ATM or to credit services, in some cases, even the access to a bank branch is a challenge. So if we divide the banked to the unbanked population, would you say that the unbanked population is small and possibly insignificant? Is this the reason why the financial sector doesn't really care about them as a whole? Let's place this into perspective. According to a study done in 2019 by Oxford Economics and Juvo, 1.7 billion people around the world are unbanked. Let me remind you that the world population stands at 7.8 billion people. Simply put, 1 out of every 7.8 people globally do not have access to financial products and services. With all of this said, what role will open banking have in tackling social inclusion? As mentioned earlier, the purpose of the open banking, open finance movement is to have the consumer at the center of the creation of products and services to serve them. But as this is becoming, for the most part, a regulated initiative, meaning that the regulators of each country are forcing banks to share data with fintechs. Many fintechs and other firms, including financial institutions, are seeing the opportunity to serve consumers of all types. This means that a sudden shift in collaborative innovation between financial institutions and fintechs will speed up the creation and access of products and services to consumers both banked and unbanked. Some indirect benefits to social inclusion and open banking is the decrease of cash, which has a direct impact to corruption, drugs, and other issues that harm our communities. In looking at this from an economics perspective, the implications of social inclusion, according to the Oxford report I mentioned earlier, would be adding 250 billion to global GDP. This report also believes that this would bring 408 billion in global credit availability, 512 billion in household savings, and a 6% increase in GDP per capita in low-income countries. In simpler terms, open banking will provide consumers with access to credit facilities or other products and services that will certainly make a massive difference to their lives, but undoubtedly to overall world economics. With COVID-19 becoming such a life-changing event, there has been a substantial increase in the use of digital-based finance. Banks and other financial institutions have seen a major spike in the use of apps and other online services due to the inability to open branches and offer clients with walk in services. This is seen as the great step into true digital transformation that will then link to the opportunities of creating further products and services tackling social inclusion. Some examples of open finance and social inclusion is, for example, supermarkets that may offer cash credit loyalty programs. These programs would be available to anyone, regardless of their poverty status or whether they have jobs or not. The supermarket would work with a number of financial institutions where a simple debit card would be provided where these cash loyalty rewards would be credited. This would be based on just normal shopping that a person would do. The competition between the supermarkets would obviously increase, creating lower prices, more flexibility for anyone that signs up for these free loyalty rewards. The holder of such a card would be able to use those funds as they would see fit or designate it to the use of certain stores. Regardless, this will provide the unbanked with a first step into access of products and services. They may be able to take these cards to an ATM or use them in other means and other ways that they otherwise would have never had access to. This example could be tied into other new products and services. So here again is where financial inclusion is allowing for social inclusion to grow through this type of new products and services because of the start of initiative like open banking. So these are very exciting times of innovative collaboration. We are seeing in countries around the world, particularly those with large populations, where social inclusion is a major aspect of daily life. If we take the likes of Mexico or Colombia, or even in Nigeria and some of the African countries where populations are so vast. In Nigeria alone, with a population of over 200 million people, we are seeing where just 30% of that population is banked or has access to financial products and services. That means that you have a very large population of over 140 million people that do not have access to financial products and services. And that is in a single country. The impact of what open banking has to offer and the impact it will have on social inclusion will radically change population and how they are served and how they interact more and more. And with elements like COVID-19 and other potential catastrophes that may happen in the future, the need for digital transformation and the access to services like this, digital services that people will have at access at their fingertips will become vital for the future. So again, these are exciting times of innovative collaboration. Now, what are your thoughts around social inclusion and some of the issues around this? Do you feel that there are other things that are also more relevant or could be done? I'd like to hear your comments as to what you think social inclusion is and how it may impact or how you have seen it impact communities around the world. As for me, I think this is what I wanted to share with you is to talk to you a little bit about the Open Banking Initiative, a movement that you may not be aware of, something that has become now a global movement, with many, many countries moving into this aspect of open finance, and in the future, open data, where we will use consumer-based data to be able to, for you as a consumer, to be able to share and work and deal with products and services around the world in a seamless cross-border manner. Today, some of those services are not quite yet available to you. But again, open banking is seeing how this is the first step into the future of what we're calling open data or open X, the ability for consumers to own their data, the power of your data to be able to take that anywhere and to benefit from products and services that you will use around the world seamlessly. In some cases, the whole movement of open is intended to be able to make your lives easier in a way that you may not necessarily be involved in or be even aware that this is happening around you. Nevertheless, The power of this is for those that truly, truly need it the most. Those, like I said, that are in remote locations or that don't have the education to understand what products or financial services are, or the awareness of true economics or anything that may be able to help them to save money. We're seeing how personal finance is becoming incredibly relevant around the world, how people are taking more control of their own finances. And this is for the banked and the unbanked. And here is where, again, open banking plays a big role because now we have, through the sharing of this information, the sharing of this data, fintechs and other large institutions or small institutions or institutions of any size being able to take that information and create products and services that now fit consumers directly, individual consumers. For many hundreds of years, we've been used to financial institutions creating products and services that are just one, meaning that all consumers must pretty much fit into the mold of a financial product. With the movement of open banking and open finance and open data, we're seeing where these will be tailored more to the consumer, to the user based on their individual needs. Once again, this is where personal finance and other types of services like that will be more tailored to your requirements. And you will be able to take your data and find the right product, the right service, the right institution, the right element that will allow for that. We're seeing some of those changes today, for example, in the payments world, where consumers are now able to make cross-border payments or avail of certain payment services in ways that we had never seen before. In the past, we would have to walk into a bank and deposit our money or give our money over a teller for there to be a transfer created through a banking application or an international banking application, and it would take days for that to occur. Today, we have a whole series of services, not only in the retail space, but also more and more in the corporate space to fulfill the needs of immediate payments. The whole issue around open banking is once again the consumer, all of these elements being consumer centric. It's you having more control of the speed and the need and the risk that you like to take. And when I speak about risk, you would have a logical question of asking, well, what about fraud and other risks that may endanger your data or the funds or whatever it is that you're doing online? Just like we are also advancing in products and services, we are also advancing in the technology needed to protect consumers. This is done through international standards that are more and more becoming more and more efficient in how we protect APIs and other technical interactions to allow for the exchange of data and the exchange of this information in a much more secure manner. But there is also another component that is allowing people to have more control, and that is consent. By consent, it means that for everything that you do, a fintech or a financial institution or whoever you interact with have to ask you as to how you want to interact. How much information do you want to give, and to what extent? How long is that information valid for? So it gives the consumer much more control. And this is something that is definitely different. We've never had this amount of power. And this is where, again, the unbanked and social inclusion comes in. Many people, and not only in the likes of unbanked or in people with that are not part of this social inclusion movement, but even those that are banked may not necessarily have the education or the knowledge or the technology awareness. Some of our most elderly people in our society may not have the experience or the education or the ability to understand. And that's why the open banking movement, the open finance and open data movement will ensure that we provide consumers with that upfront information so that they make that the choice of how they share their data, how they interact in a much more straightforward way through consent management. In the European market, we're seeing an element called GDPR, and the GDPR is a rule book of which institutions must abide by, allowing for or implementing a GDPR or a consent movement of which every user that has access to or would like to do anything regarding the sharing of data, the creation of payments, or other elements must provide a consent as to who can share that information, how that information is saved, how it is shared, and until when. So I think that Again, institutions and fintechs are playing an important role in assuring that people of all levels of technical education are protected. Again, as I said before, these are very exciting times of innovative collaboration. So that's all for me on my side. And I would like to thank you for listening and to Campus Party for allowing me to speak to you. I look forward to your questions and comments. Thank you.